family, this is me, Migrant the Trader, and today I want to bring you into the trenches a bit. I want to take a look at XRP. XRP, as you know, is one of the future coins that we're looking at is going to be a tremendous coin in the future because of what it does and what it's supporting. But right now, what we're seeing is the result of a November run on the coin. Now, if we will take this chart and just, you can see what price was doing. This is back in the whole month of the whole year of 2023. See, XRP was like lingering. It had some little bit of, movements up, but for the most part, XRP stayed in this area right here. All right. But then after the election, the night of the election, you see Monday, November 4th, and then on the 5th, that right, this chart, each of these bars represent 1 week, but on that week, it went 5 weeks of upgrowth, tremendous. But now we're looking at this chart. It's reached all-time highs, and you can see this wick above this candle here. This is telling us that the buyers are starting to lose steam and the sellers are coming in as people are taking profits at the top of this move. Now, this puts us in a position of going a little bit to the sideline. We became less bullish on this right now because it's reached all-time highs, and is pulled back. We want to be careful buying into this peak up here. And so this is why I'm going to look to hold on this, to let it fall off some before I want to feel like the market want to take back off. What do I think? Well, it's not what I think. Let's just pull up some tools that I use to let you know. First tool is RSI. This chart down here, this graph down here, it is showing that price has been in this overbought region for quite a while. Now let's just take a little foray across this chart here. We're looking at RSI. Notice most of this time RSI stayed within 70. When it's approaching 70, we know is heating up. When it goes above 70, this line right here, 70, when the graph goes above that, then that's the area we call overbought. And when it goes below 30, then we say oversold. And usually in this overbought and oversold regions are where we look for the market to eventually cool down and turn around for a moment. And so we don't really want to be buying into an overbought market because of what we're going to see. When the market went in here, notice what happened. It got to a high. The people start taking profit. So this green candle here, you can see it has a candlestick. That candlestick says it got to its high, and then it pushed back. The sellers pushed it back as people were taking their profit, and it fell, and RSI went back down in the trading range. And it went to 50 and then went below, setting up a potential bearish move. But you see, if this gets into this region, we want to be careful of buying because the market is soon to turn around unless it is a strong uptrend. And when we see that, then we can be up here in this overbought region for an extended period of time, as long as this trend is still going on. So you want to look at your volume and see that your volume is going to support it. But you can see here, after this candle was over, the volume was all selling pressure. You don't want to buy into selling pressure like this. It's going to cause you to have to wait before it turns, and you don't know exactly how far it's going to fall, and then how long it's going to linger down before it gets you back up above this. So let's go again. RSI, let's look at RSI. RSI was teetering down on this oversold region, and thereafter it started a little bit of upswing. Couldn't catch much traction, but nonetheless you can see it got to a point where it fell, and then it went below this, and then it stopped and started going. You started seeing green candles thereafter. Why? Because the buyers came in, because the price was oversold and it became a good value. So things went on sale and people start buying. That's how the market works. Let's look at some more at this. Let me make this chart more compressed so we can see more. Here we can see some more. Over here, spiked up. RSI went above into the overbought region, and look what price did shortly thereafter. This last candle peaked and it had a good sized wick at the top, and then price start falling off. Okay, it fell off, went down below 50, and then got traction, and the trend started again. So a lot of times it's going to fall off. When it goes above this, a lot of times RSI will fall at least back to 50. A lot of times that's what it does before it turns around and continue the uptrend. And that's what we saw here. It went down below 50 a little bit, couldn't go too far, and price started going back up. And it hit another little peak right here, but look where the peak is in RSI. Well below our overbought region, so the trend is still on. You can buy into that. RSI was still, you know, in the region where you could buy. It was above 50. So the bias will still buy. So you could have bought into that and you'd see what happened. It never got below this point right here. It dipped and it started going back up. Now look at this. It went back above the 70 and look what happened. Boom. Fell back down. Came up again and slightly went above 70 again with this one. And then look what happened there. You see how violent that sell-off is? So you want to be careful buying into an overbought market. I can show you more and more. Let's look at some more, just so you get to see. Every time that thing goes, if maybe we don't have any more. We ran out of the coin. All right, we ran out of time for the coin. So the coin began here, so we didn't have any more. So when RSI moved above that, every time it moved above it, shortly thereafter, it sold off. RSI went above, sold off. Okay? RSI went above, sold off. See? RSI is very above there. This candle here has a wick. This next candle is red. How far down is it going to go? Now, you got to realize everybody wants to buy it because it's rallying. You feel like, you have the fear of missing out. But be careful. That greed will cause you to be hurt because we don't know. We have to wait to see what's going to happen. So what I want to do is bring another tool in here, and it's called Fibonacci retracement. Fibonacci retracement helps us to get an idea of where prices could fall to, especially when we have a chart like this where the price has moved into a territory where it's never been before. So we don't have previous activity to show us where these potential areas would be where price would fall back to. Okay, so when you're looking at price RSI, I mean XRP above 60, this is rarefied air. Rarely did it go above $1. See, this point right here was $1. Let me get my. All right, let's go back over here. Over here, back in April 2021, we got up to $1.95, but it fell right back down into what price? 60 cents. It got up over here to $1.43, fell down to 90 cents, rose back up to $1.32, and made its fall right back to 58.60 cents. So 58.60 cents. So anything above this $1.90 something area, we've never been. So we don't have any points. But what we can do, we can say the market could fall from where it is. It could fall, and if it does, let me put a horizontal line here to let me know that this is a place where price peaked but couldn't go above that. Let me put another line at these peaks here. When you look at these prominent peaks, these are places where the market been, but it couldn't stay there very long because sellers and selling pressure really increased, forcing the prices. Once it got to this price, it fell down. So in the future, when price falls back down to this, or if it below this, when it rise up to this, now we have these lines. We'll see when price rise back up to this, it may stop and pause momentarily. Let's take a look. Right in here, the first line, yes, boom. You can see the price got pushed back down to this line. It fell below there. And then this candle here had a lot of energy. So it was able to push up. But if we was to go and look at a smaller time frame on this, and I'm just trying to teach you information right here. We're going to look at this and try to get a smaller time frame. Let me first see if I can get some kind of shape on this. Let me draw a rectangle around this area right here. So I want to be able to see this region right here. All right. I want to see this region, and I want to take a look at this price, which is at $1.95 area. Let's see what happens when it got to this $1.97 point. So we'll go down to a smaller time frame now. Going to 30 minutes. All right. Compress my chart. All right. So now here we are. We're inside this region here, and here's this line. See what happened? The first line, price hit there. Let me make this a little bit larger so we can see it. It's good information. See, the price rose up to this line, stopped, fell down, got some traction, broke it, fell back through it, broke it again, fell back, and then went up. But then it retested it and it fell right back to this line. You see how this line is acting like a magnet? Now look at all these things bounce, 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 break through, come back up, swings across there, bounce a little bit more, swings across here, bounce a little bit more, bounce, and then little dribbling, and then fell through. And then on its way back up, it got caught up in there and rejected momentarily, fell down, and then it was able to break back through. Once it got back through, it started falling on this and bouncing off of that. You see that? So once it no longer could break below this, where do you think it's going to go next? Straight up to our next line. You see, that's why we look at those previous prices and we draw these lines so in the future, when the market gets there, it becomes like once it broke above this, this became a target. If you were trading this, this is a target to take profit. Because look what happened when it got there. It stopped and fell down. So you take your profit somewhere close to the top of this so you can get your profit out and then you let the market fall and then look what it did. Came back and tried that again. Fell, fell. And then is when we got that one candle that was able to break up above this. But it did not do that until it was able to get enough energy to break through this price barrier, which we called resistance at this point because price was below that and it was resisting upward pressure until it finally broke. And that's what we need to know. These prices, these zones, support and resistance will eventually break, especially if it's under enough pressure. Okay, so that's what I want you to be able to see. So now when we use that, that helps us to try to determine where might this price fall to. Now in this smaller time frame, we can see this is the end of the action for XRP. This is where we are currently. And you can see XRP is now falling. It has fallen back. And now this box top doesn't mean anything. I just drew a box. But what we want to see is this line right here. So this line is still in place. And this price is $1.97. So what I would say, if it falls back down to $1.97, we have to take a look and see what happens. We might be able to buy once it gets back down to here. If it falls below there, guess where you think it's going to go? It's going to go down to here. All right? This is what we know. Why do we know that? Because if the price is going to fall and continue to fall, it will fall to a place where in the past it found support. If it goes up, it will go up to a place where in the past it found resistance. But if there is no resistance, then we have to use other tools to project where price is going to go. And so we need them because look, right now, XRP is in new territory. It's never been in this region until now. But how could we have figured out where it would have gone before it got there? Hold the phone. That's what I'm about to show you right now. I'm going to increase the time frame so we can see more data. Let's go back to the daily chart. I'm going to take this box off now. Now, what I'm going to show you is waves. Once again, I like to show you that the market does move in waves. This run, it took a 5-wave move up. And I showed you this in the previous video. 1, up, down, 2, up, 3, down, 4, and then it exhausted itself at the end of this 5. And now it's in a retracement correction phase. You see the price went down 1, it went up 1, now this down the third one. And usually if this is a true corrective phase, this third wave should fall back below this low point right here before it kicks back in. It doesn't have to, but a lot of times it does. But if the trend and if the momentum is still bullish, it could resist falling below this. So that's why we have to sometimes be patient. If you want to get in where the market is going to move in your favor without you having to ride a roller coaster, you have to be patient and you get in at areas where price can no longer break through, and then that means the buyers will kick back in and then force the prices back up. But if you jump the gun, you might have to ride this price down, seeing your portfolio decrease because the price will be moving away from you. You'll be losing on that deal because you got in when it was correcting itself. Wrong time to get in. So you have to wait. All right, so now let's look at this. Each of these waves within themselves, based on our studies, will give us information, targets, where price would go. Let me show you that very quickly again. When I look at my trend-based Fibonacci extension, and I go from the bottom of the wave to the top of that wave, and then I would just drag it across that part right there, and I'll lock that in. And now what that shows me is all of the different price areas where price could go. Now, what we were looking at, let's say this wave just happened and none of the other information to the right had happened at that point. We were looking into the future. So we put up a retracement, a extension, Fibonacci extension tool, and it extended upwards, and all of these lines would represent target prices where the market could go. Okay? If price continues to move up, these are some targets that we can be expecting price to go to. Now, we can look. The first time when it started moving up above the high of this wave is when we started projecting where it's going to go. And you can see where it went, right to this green line right here. It went almost there perfectly. You see that? Price went almost right to that green line before it stopped and fell back down to this white line, which happens to be the top of this wave. It didn't go below that, so that lets us know the trend is on the way upwards. Price could not break down below this wave, so we're looking for another push up. So this was wave one. Wave two came down to a low of this part, and then it started going up to a height of this point right here, wave three. It went down to the lowest part right here, which is wave four. So from the bottom of this all the way to the highest point here represents our last wave five before the market stopped, fell off, and now starting to correct itself. So our first wave had projected a good price right here. The market went through there, came back, fell back below there, went back up there. You see how this line became a key area? That line was drawn before the market ever got there. So why would the prices stop and bounce around this line like this? You see, it went above this, now fell to there. Now you see, why does it do that? Well, it's because everybody learns these tools, and if everybody's using the tools, then they're going to be making decisions at these key areas. That if people were not buying and selling, you would nothing would be happening. So people are buying and selling, and you can see that based on what these price candles are showing you. Decisions were made at these places. Price blew past that, stalled out. So that means the buyers realized it might not get to our next target. So they started taking profit. And when they start taking profit out, where do you think the price went back down to? The target. The target. Why? Because there was a lot of people who's taking profit at this target. That means they were buying until it got here. So to cancel it, they have to sell those. So when you sell it, it puts selling pressure, which forces the prices down. That's what you see happening. Just so you understand why the charts do what they do. I'm just trying to give you as much information to help you. Okay, so that tool, looking at that first wave, gave me a good target, many targets. But as we saw price continue to move, as soon as it moved above this point right here, now we're starting to look at other targets and what we could have done. Let's put a horizontal line right here so we can lock this price in. Okay, we're locking that price in, which was the target from this wave. Now we're going to take this tool right here and base this tool on the second wave. The first wave was over, second wave was over. Now we're looking at a third wave. That finished. So now when price moved above my third wave, we need to put this tool on the bottom of wave 2 to the top of wave 3. Okay? Right there like that. Okay? So when we it was at this point right here and none of this other stuff over here happened yet, this tool was projecting where price would go if it continued to rise. Notice what happened. All these lines here represents targets. But look what happened when it got to my blue line again. Look, it went exactly to that blue line. Stopped. People start taking profit there. And guess what happened? A lot of people who didn't know that they should not be buying here got in and start buying, expecting price to keep going higher. And they're the people who are now sitting holding a loss because you see what happened? That buying pressure pushed the price back up above that blue line. But there was a lot of people who knew that this blue line was a significant stopping place, and a lot of people took their profits, and that forced price to fall off. See how perfect this thing was? It projected where price would go if the market continued to rise, and the market went exactly to my blue line there. That is a 1.618 Fibonacci extension point, which happens to be a highly probable area for the markets in these trends. When it's trending, the waves generally hits that, and oftentimes it will go up. If it's a real strong wave, it can go up into your 2618 range. Depends on how long your view is. If you're looking at maybe the fifth wave, your fifth wave oftentimes will get you up into the 2618. So how does that look? Let's show you. Back on wave one, that was one. Well, if we want to be honest, we can move this to this bottom of this red movement right here. Oh, look at that. See what happened? Because this red candle was a down candle, so we go from the bottom of that and then take this big wave here. So when I took the bottom of this to the top of this wave, look what happened. That was wave one, wave two, wave three, wave four. Look where wave five ended up. 2618. So if you keep your Fibonacci extension tool on your first wave, and then you, because you're a longer term trader, then you can put a target up here at your 2618, and that will be the five wave. A lot of times your five wave will end at your 2618, and you just saw, I told you it, then I showed you it, and look what happened. Boom. When I corrected where this wave really was beginning, this chart just perfectly showed you that. I didn't create the tool, and I didn't create this chart. This is what everybody in the market who's been buying and selling XRP, this is what their activity has done. And this tool has now identified that somewhere along the line, everybody must have been looking at, a lot of people was looking at the same tools, because when price got to these areas, look what happened. They did something. So that's why we use this tool. All right, I believe this video is getting kind of long. Let me cut this video, and I'll come back with another video on trying to tell you how far do we expect this price to fall if it continually fall from this point on. So that's another thing we need to know, because a lot of you are wanting to buy XRP, but you don't know how to get in. So let's take a look at how much can we expect this to fall before the buyers kick in and start pushing the price back up. So stay tuned for another episode when we talk about this price and how far it will go. Until then, talk to you next time. Bye bye.